Just moments ago, editors of the Financial Times decided what's going into tomorrow's edition. We partner with them to bring you Lex on Bloomberg so you can get a sneak peek at what's going to be in the papers tomorrow. Kevin Allison joins us from London this morning. Kevin, you are taking a look at the bumper crop here in the United States. We're going to have a record harvest in soybeans, corn, etc. You're looking ahead, though. What do you think it's going to mean for global commodity markets?
Well, that's right. It's October, and that means that the combines and harvesters are kicking into gear across vast swathes of the Midwest Corn Belt. The interesting thing about agricultural commodities at the moment is that with so many billions of dollars of stimulus money floating around in the world economy, there's a concern about inflation snapping back as recovery takes hold. And interestingly, we think that food prices are one of the first places that investors could see inflation start to come roaring back. Now, that said, investors who've been betting on a rally in agricultural prices so far this year have been disappointed. Prices of corn and soybeans are both down on the year, contrary to many expectations in the spring, when a series of heavy rains across the Midwest delayed plantings and raised concerns about the crop. Since then, it's been all near perfect weather, and the U.S. is on track for its best ever soybean harvest and its second best ever corn harvest. So we seem to have dodged a bullet, really, with this year's harvest. But to look at some of the structural factors that could kick in later this year or into next year as the good harvest recedes into the background, you've got resurgent China with lots of economic growth causing people to eat more protein as a portion of their diet. That increases demand for grains like soybeans. You've also got U.S. ethanol laws requiring corn to be refined into ethanol for use in gasoline. And the amount of ethanol that's going to be required by federal mandate is going to increase drastically over the next few years. So we're still quite bullish on agricultural prices in the medium term, even if in the short term, bumper harvest has kept returns on investment in soy and corn down.
Kevin, you just mentioned earlier that we might see commodities feed into consumer inflation sooner than perhaps some other things, but are shoppers ever going to see the huge price spikes that we endured back during the commodity boom when oil went up to $147 and everything else just seemed to come behind it?
It's an interesting question, and one way of getting into it is to look at what's happened with some other commodity prices this year. So while corn and soybeans are down, prices of cocoa, tea, and sugar have shot through the roof. And this is due strictly to supply shocks. So with inventories of corn and soy tight, I think that the system for corn and soy remains vulnerable to supply shocks, and that it's not guaranteed, but it's entirely possible that you could see prices shoot dramatically higher in the event of a bad harvest next year and continuing demand from China.
Okay, thanks very much. That is Kevin Allison joining us there from London. That is the Financial Times Lex on Bloomberg. Essentially, you get to find out what's going to be in tomorrow's paper today.